Okay. All right. I'm assuming that worked.
Yes, I see it. Good job, Mark.
Fantastic. I'm a tech wizard. Warning you. That's a joke.
It's like getting better, getting better. Okay, well, it looks like it is 6 o'clock on my clock. Good evening and welcome, everyone. So glad to have you here this evening. Again, all our grant winners, so glad, happy for all of you and to see you in person. My name is Tracy Irby. I am the director of the Center for Women Entrepreneurs. For those that aren't familiar with us, we are part of the larger Jane Nelson Institute for Women's Leadership at Texas Women's University. They are dedicated to preparing more women to take on successful roles in business and public service. There's 3 specialized centers: the Center for Student Leadership, the Center for Women in Politics and Public Policy, and our center, the Center for Women Entrepreneurs. The purpose is to ensure women have the education to establish careers as C-suite executives, the skills for building entrepreneurial businesses, and the framework needed to run for public office. So glad everybody is online tonight. I am actually off-site. I am in Kansas City, Missouri at the Kauffman Foundation, but I did want the opportunity to greet you. Donna Lisa Stinyard, our program director, is going to take everything over from here. Oh, Donna Lisa, I'm so sorry. She is now our associate director.
Nope, that's okay. That is okay. So welcome, everyone. 1 second here. So we have Mark Moyle from Frost Insurance on tonight to talk to us about Insurance 101. So Mark has more than 25 years of experience working with business owners to manage their risk. He previously served on the board of the Independent Insurance Agents of Dallas. Mark graduated from the University of North Texas with a degree in business administration with an emphasis in finance. Mark, welcome. We're so glad you're here this evening.
My pleasure. Thank you. So do we want to just get right into it?
Yep.
Okay, perfect. So what I've got here is we've got insurance is a big world. I've got what I hope is a fairly condensed version, like we said, 101. I'm going to go through this and hit the high points. I'm not going to read every word. But what we want to do is just basically get the framework of how business insurance works. And then by all means, if there are questions, fire away. Like was mentioned, I have been with Frost Insurance for 26 years now, focus on business insurance. So I am not doing health insurance. We do as an agency, I do not, and I don't do personal lines. So those are certainly other areas of the insurance world, certainly the employee benefits that if you're a small business owner, you would want to pay attention to and have knowledge of, but that is not my discipline. I have folks within my office that can handle that if that need ever arose. So again, I've mentioned to a couple people already, I'm a Teams person, so excuse me if maybe something goes a little awry, we'll figure it out, but let's see here. That was the wrong button. There we go. So just in general, business insurance is an umbrella term that means all types of different coverage. Some of it's required by law, some of it's not. But business insurance is not actually required by law in Texas. There are certain things that can be, but business insurance is not required in Texas. And you can see there, it provides you peace of mind. Just the general idea of insurance is provides you security and protects your assets. So business insurance, hold on a second, do something there. Okay. Here's some of the things that protects you from claims and lawsuits you can't see coming. Below are examples of questions that you need to determine what you need. What is your trade? So these are underwriting questions in terms of just a little bit about your business that will that will decide and help generate the premium and help the underwriters assess the risk. I want to back up a moment. I am an agent, so I don't write any insurance coverage. I don't make underwriting decisions. I do nothing. We'll get to that in a second, the different types of insurance, but I just want to kind of point that out up front, because some of what I might speak to, you might ask, hey, Mark, what do you mean by that? Or why are you taking that approach to it? Again, all I'm trying to do is match up a business owner with an insurance carrier that will write the coverage. And part of that is learning as much as I can about that business. And then I can articulate that to the carriers, and then we can produce a quote and kind of go from there. But again, I'm not making anything. I'm just strictly a middle person connecting business owners with insurance carriers. So kind of going on again, back to below are some of the questions, examples of questions that might help determine your needs. Again, what is your business? Where is it located? How many employees do you have? What's the estimated revenue? Are you working from a home office? What kind of services do you provide? Again, those are general underwriting questions that help us figure out kind of what your insurance needs are, and then where we need to place you. All right. The type of business insurance you need depends on the type of your business you own and the services you provide. What are some basic policy types? You've got a business owner's policy. That's going to be pretty generic. That's a catch-all kind of phrase in the insurance business. That would include your liability and property, and that, generally speaking, that's pretty simple. We could go online and do that, and that's simple. That's like a package deal. Think of it that way. More specifically, you've got general liability. That's going to cover bodily injury and property damage. We'll cover that in a second. Property, which is going to cover the sticks and the bricks. Your business interruption, we'll address that in a second as well. That's going to be additional expenses associated with a covered peril as a result of a property claim. Again, we'll get to that in a second. Auto, that's fairly self-explanatory. Workers' compensation, again, that's for your employees. And cyber liability, which is an ever-growing issue in the market. So business owner's policy, again, this is the coverage you need in one policy. Generally speaking, if you're starting a business and you're brand new and it's not something that's super complicated, carriers have designed programs to make it easy to obtain insurance, and they'll include basically all the coverages under one policy. Generally speaking, that is not the area that I operate in. My clients are generally much more complicated and require more specialized coverages within each discipline of coverage. And again, we'll get to that in a second. I don't want to go through all this. There's a lot of words on this page, and I'm not a big into reading stuff. So basically, your general liability is going to cover your business for bodily injury and property damage. So bodily injury is exactly what it sounds like. It's if your product or your work product is somehow causes bodily injury to a third party, not an employee, a third party, somebody else, then you could be sued as a business owner. Running through these, it can be a premises liability. It can be premises, so somebody could slip and fall in your building. And then there's some other operationals. Is your operations kind of going on to some more of the general liability, the definitions? Your product liability. If you manufacture a product, you're going to have liability when you sell it. If that causes bodily injury or property damage to a third party, you could be sued. Completed operations liability. So that is your work product, and it gets put out and implemented to whatever business it's going into or whatever function it serves. And if it causes, again, bodily injury or property damage, so let's say that you make a component part and that component part does not function properly, and then it causes something else to not function properly and a building blows up, then that's completed operations. Again, that's the liability that you have once your product basically leaves your facility, if you can think of it that way. Contractual liability is also covered underneath your general liability. That one's a 3-day seminar on explaining what contractual liability is. But just understand that when you sign a contract, you've got liability within that contract. Again, that's a very, very complicated explanation that we don't need to go into at the moment. Just understand that contractual liability is part of the general liability policy. Damages, again, you can be held liable for damages, defense costs. So this is always a big one, and this is something that would be everybody should be paying attention to this. When you own a business, if you're a small business owner, obviously you could have any number of different claim scenarios, right? And many times, somebody is sued because they get included into a bigger loss, and everybody gets named, right? And so the defense costs can run up very quickly. Your general liability policy covers the defense costs as a result of you being named in a lawsuit. Again, it can get a little bit more complicated than that. We really don't need to go into that great of a detail. Just understand that the defense costs as a result of a bodily injury or property damage is also covered within a general liability policy. And then reputational harm, I wouldn't read too much into that. That's not something we get into very often. I'll take a pause here and take a breath. Does anybody have any questions just generally so far?
Yep, you have one from Sonia. She said, I have general liability. Do I automatically have contractual liability, or would I have to ask for that?
Yeah, so that's a great question. There is no such thing as automatically in our business. What I would tell you is that, thank you, that's a great question. So general liability, think of it this way. Everything is included unless it's excluded. Okay, so I'll say that again. Everything is included unless it's excluded. So I would say that most likely I would be shocked if contractual liability was not included in that general liability policy. I would have to think, I don't think there's a single client that I have that would not have contractual liability included in it. And that would be something that as an agent and as an agency, we would be paying very close attention to, because that can get us sued, and we don't like to get sued. So I would say that most likely the answer is yes. If you have your policy, there's going to be it's called the deck page, the declarations page, and there'll be endorsements in it, and it'll have all these neat little numbers and names by each endorsement. And if you really want to find out, you can go through, and there will be an exclusion that would say something along the lines of P102-053 or something, right? It would have some type of nomenclature on that endorsement, and it would say contractual liability. And if you ever saw anything on that policy that said, that looks funny, pull up the endorsement and read it and just see what it says. But contractual liability would have to be excluded to not be included. So I would suggest that it is covered. It's a good question. Any others?
Liz asks, if our business is solely operating online, what do you recommend for, I think we'll get to that, Liz, the specific, he did have cyber liability in there.
Yeah, hold on to that question. We'll kind of get to that. There'll probably be some other ones that are similar to it by the end. So hold tight on that question. We'll get to that. Okay, anybody else?
Yeah, hi. I had a gal look for a policy for me, but because my business is unusual, she had a heck of a time finding a policy for me. We ended up having to do like 2 different companies to cover 2 different things, and one of them had to be this niche company that was for only like artisans, and I mean it was a pain in the butt. So I guess I just was curious what your thought was on that.
Do you mind me asking what the business is?
I'm a garden coach. So there was the consulting piece, but also the design and installation piece, but I'm not like a landscape designer, so it's not that big. So, yeah. Yeah.
So, okay. I will answer that question it can go a lot of different directions, but generally speaking, insurance carriers have I'll use the word templates, that they basically, you check off the boxes, and if you fit in the box, then you're good. But if you have an arm dangling out of that box, you're not good. I would suggest, I would guess that the reason why that was a challenge is because you could be sued for your professional knowledge, which I don't know if we go over professional liability. I don't think we do. I'll touch on it real quick. So professional liability is basically your thought, your work product, right? It's not, it's being an insurance agent, it's being an accountant, being an attorney, being somebody that is perceived to have a higher level of education than you do on a certain subject matter. Okay. And so I would think that the concern there is that you're getting paid a fee. So that's another thing, a fee for service companies, generally speaking, are professional service companies. If you get paid a fee for basically your intellectual capital. And that is not covered by general liability, because what can happen is, if you go out there and you design something, right, and it looks great on paper, and you go out there and all of a sudden the person doesn't like it. Okay. I mean, they don't like it, and they sue you as a result of it. Going back to what I mentioned on the general liability, there's no bodily injury or property damage. It's a monetary issue only, that they're trying to collect damages from you. That is not covered under a general liability policy. That's a professional liability exposure, and that can present some unique challenges. So it sounds like it was probably done correctly, but just because of the nature of your business, yeah, you've got some unique exposure there. Does that answer your question good enough? I guess so. All right. Any other questions?
I think we can go on.
All right. So property, again, generally speaking, we don't need to go through all of this, but just as a general overview, property is exactly what it sounds like. It's covering the sticks and the bricks. So if you have a fire, a tornado, hailstones fall out of the sky, then that's going to be property coverage. Property coverage also covers your inventory, anything that you're responsible for in terms of property. I think that's probably pretty basic. Is everybody pretty comfortable with property? You just want to make sure your property is covered correctly, make sure the limits are adequate. And then again, that property includes not only your inventory, but it also includes your tenant improvements. If you've got computers, desks, all of those things. If you own the building, you want to make sure that that's covered as well. The coverage, generally speaking, is pretty broad. Yeah, that's property. Property is pretty basic stuff. It's hard. Texas property is not an easy line of coverage. Property is not inexpensive because we have hailstones that fall out of the sky at a very high rate, and so property can be a challenge. A couple of things, just real quick on property. So again, an insurance carrier is going to want to look at what your property is. So what is your business, right? Because there's a big difference between, let's just say, being you're a distributor of gloves. Well, there's not a lot of exposure there inherent to gloves, right? In terms of the potential of them catching on fire or blowing up. Whereas if you were, let's say you own a garden, a landscaping company, right? And you've got all your plants are always outside, and they're obviously more susceptible to a big wind, and they could all blow away. So there's just different factors that come into play in terms of how an insurance carrier looks at insuring property. The age of your building, the description of your building, the location, what other tenants are in that building can also be an impact or have an impact on your premium. Let's say you own a building, just for example. Let's say you own a building and you are a distributor of gloves. So there's nothing fancy or special about a glove, right? There's nothing going on there that would present a challenge to an underwriter. However, your neighbor, on the other hand, is a car repair company, And so that car repair company could have oils and gases and flammables. And so now all of a sudden your property rate is going to be higher as a result of your neighbor's activity. So if you own a building and you think, you know what, I can sublease part of my building to somebody else, just make sure that you talk to somebody and understand the impact of that, because it could have a pretty significant impact on your ability to get coverage and the pricing. All right. Any questions on property? Again, pretty basic stuff. I think everybody probably understands property. Beware of one other quick thing on property. If you own your own building, one of the things that you want to be very, very aware of is how the deductible is structured. Many times you'll have a tiered deductible. So your contents, right, your business personal property might have a deductible of $1,000 or $5,000 or whatever, whatever suits it's appropriate for the account. But your roof, on the other hand, might have a percentage deductible of 1%, 2%, 5%. And so that can be pretty significant. If you've got a $5 million building with a 2% wind and hail deductible, that's $100,000. So that's a significant amount. So just be aware of how the deductible is structured, because again, that can have a major impact on what you get paid in the event of a loss. So business interruption, this is a really critical coverage. I don't know the stat off the top of my head. It changes. It's a big number, but the number of businesses that don't start back up after a significant loss is high. It's a very large number. Let's say you've got your own business and a tornado blows it away, fire burns it down, whatever. Many times those businesses do not reopen, and they don't reopen because they can't withstand the economic pressure as a result of that claim or that peril, meaning that the business is shut down. There's no revenue being generated, but you still have employees that now you have to make decisions about. You still have rent that needs to be paid, taxes that need to be paid. All of these issues, these pressures are now only exponentially more. They're just larger because now you're not generating any revenue. So what business interruption does is it pays for that lost revenue as a result of a covered peril. So again, there's a lot of different ways that it can be underwritten. We don't need to go on those details, but let's just say that, for example, your monthly payroll is $10,000 a month. Your rent is $2,000, and then there's some other taxes and other insurance and stuff. Let's just say that amount adds up to $20,000 a month. You can buy coverage, which is business interruption coverage, to cover the lost revenue as a result of a covered peril, which will pay for those items. Will pay for employee wages, your rent, taxes, all of those coverages. It's really critical. There's actually two components of it, which aren't really mentioned here, but I will mention it. You've got business interruption is the actual lost revenue as a result of the covered peril, and then you have an extra expense component to it. So let's just say that, again, tornado comes through and blows your building down. But let's just say that you're not dependent on that building. So you're not a manufacturer, okay, that has specialized equipment. You're a distributor of gloves. But you lose revenue because it takes a while for you for the claim to get settled out. There's a disruption in your business, obviously, but you're able to get back up and running by locating an adjacent building that's down the street. You're able to kind of manage your business and kind of get it back up and running. And let's say that it takes 90 days. In that time, again, you've lost revenue as a result of it. And you've got an extra expense component also in terms of temporarily relocating your business. So the business income component will actually pay for that lost revenue, which again can pay for your employee wages, your rent, those continuing costs and expenses. The extra expense component pays for the the cost to temporarily relocate you. This is a critical coverage. Most small business policies will have this thrown in automatically. But as your business grows, that no longer is available. So you just need to be very aware that, again, there's ways to cover that lost revenue and the extra expenses associated with a covered peril. Not sure I did a great job of explaining that, but I'll throw it out there and see if anybody has any questions on that one.
So we did have one, would a pandemic like COVID be covered under this business interruption?
Now, that's a great question. So the answer is no. Now, I think the government's gonna hold a pretty hard line on this, but I think there's some there's some rumblings out in California, which is where it all starts, that look like the court system might be trying to push some of that to the insurance companies, but the answer to the question is no. That's a disease it's not covered. And so, yeah, we'll see how the industry and how the political environment treats that. But at this very moment, that is not covered. That's a great question. Any others? All right. Commercial auto, again, I think probably we can go through this pretty quick. It's exactly what it sounds like. It's commercial auto. Again, it's different than your personal auto. Now, what I will tell you is that if you are conducting, let's say that you own a white Ford pickup truck and you have it personally covered, but you use it in your business to make deliveries. You need to make sure with your personal lines carrier that they know that you are making deliveries with your personal vehicle, or there's a possibility that your personal lines carrier could deny a claim if it was as a result of you using it in work. That's really important. The other thing that you want to make sure, again, because I think probably everybody has the basics of auto insurance. The other thing that you want to do to make sure as a business owner is there's a coverage called hired and non-owned auto. And so, again, if you are a business owner and you use your personal auto, which you absolutely can use your personal auto, let's say to go make a sales call, simple, right? You're not making any deliveries. You're just going on a sales call, and you are in an accident, and it's a bad one. And the folks that you hit find out that you are you're doing something for work, right? It's a work function. They can actually sue your employer for you being out in your own personal vehicle on work. Now, here's what's important to note is that your personal auto policy is always going to be primary. So the employee's personal auto insurance is going to be primary. So it will step in first. However, a lot of people carry minimum limits that can be burned through pretty darn quick. And so if there's a gap, if you will, in the amount of coverage that is needed, then you as a business owner can be sued for that gap. That is that's the non-owned component of hired and non-owned coverage. The hired part of hired and non-owned coverage is if you rent a car on company business. So you go to a trade show, you rent a vehicle, again, for work purposes, and you are in an accident. The physical damage to that vehicle is not covered by the hired portion of the hired and non-owned auto policy. However, the liability that the company might have is covered by hired and non-owned auto coverage. So my recommendation always is that unless you have a full-blown commercial auto policy with owned vehicles on that policy, so let's say you have a fleet of 10, 15, 20 vehicles, Always buy the physical damage coverage if you're using it for work. Now, again, there are components within the personal insurance policy that might provide you coverage, but as a business owner, I would recommend that you protect yourself and the company by buying the physical damage coverage. The liability, if you've got higher non-owned liability coverage within your auto policy, you don't need. And by the way, this is like $129 a year or something maybe. So it's not a lot of money that we're talking about for the higher non-owned auto coverage. But again, that's a critical coverage to obtain. Any questions on commercial auto policy?
Yes, Mark, we had, so my employees have to rent cars on a frequent basis. What coverage is needed for this?
Yep, there you go. That's what we were just talking about. So if they're renting vehicles, you have liability while they're in that vehicle while it's being rented for company use. So that's where the hired part of hired and non-owned auto coverage will come in and pick that up. So it's hired car liability is what you need. And again, those come in tandem, they come together. So it's hired and non-owned. That covers the liability to a third party, right? So your employee in that rental vehicle hits somebody else. It covers the somebody else. So it covers the bodily injury and the property damage, again, to a third party. What it doesn't cover is the physical damage to that vehicle that you rented. So again, there are ways to get physical damage coverage through credit cards and through your personal lines coverage, but that can be kind of nebulous and gray. So again, if they're renting a lot of vehicles, get the physical damage coverage that the rental company offers. Because if you don't have an auto policy that has owned autos on it, again, you don't own a fleet of autos, it's unlikely that you can get that physical damage coverage through your commercial auto policy.
So we have a couple more questions about the auto, Mark. So the first one is, what if the business is a food truck?
Yeah, I don't insure food trucks. But yeah, so a food truck is going to be is going to be a pretty unique and specialized coverage, right? Because you've got literally a rolling business. So you've got all of the general liability exposure as being basically a rolling restaurant. So you've got the general liability component. You've generally, I think the property part, the finish out of that vehicle is going to be covered under your auto policy, but you have to make sure that your auto carrier knows what the vehicle is being used for, because typically, those vehicles are it's just a box truck of some kind that's then finished out to be to have a specialized service attached to it. So, and I don't have any idea how much a food truck costs, but let's just say that the standard, just the chassis of that vehicle costs $35,000. No idea if that's correct or not, but let's just say it costs $35,000. But the finish out to that vehicle costs another $25,000. So the actual cost that you pay for that vehicle is $60,000. You need to make sure that your carrier knows what changes have been made to that vehicle and make sure that they're insuring it for $60,000.
That's great. That was a great question.
Yeah.
How does this work? So I think we were going back to when we were talking about like renting cars. Sarah wanted to know, how does this work when you rent a U-Haul and use their coverage?
Yeah, right. So the type of vehicle doesn't matter. So if you're using U-Haul's coverage, U-Haul, different. So what I would say is different rental companies can have their own captive insurance carriers. We'll maybe touch on that here in just a second. But I don't know the specifics of U-Haul. They might offer coverage that will not only cover the physical damage to the vehicle, they might offer liability coverage as well to, again, bodily injury, property damage to a third party. I don't know the specifics of that, but you could certainly ask them. And it's a simple question, right? Which is basically what happened. Does it, if I buy the coverage, does it cover the physical damage that might result from me being in an accident? That's the first question. The second one is, would it cover for any bodily injury or property damage that might result to a third party if I were to get into an accident? So I would just say, I would ask them, different rental car companies can have some different programs again, and because here's the way you need to look at it. U-Haul, they very well could have their own captive insurance program, which basically means is that they're making money off of that insurance program, which is fine. Where they might charge you, again, completely making up the rate, but $29.95 a day for that coverage. I don't know if that's accurate or not, but let's just roll with it. And so they look at it and they say, you know what, this is a chance for us to make some revenue off of writing that coverage. Okay. So that's a great question, but you would just need to read the details of the contract. No, you don't need to read the contract. Just ask the service person. You don't want to read the contract. Back that up. That's a good question, though.
That's all we have. And it looks like somebody found you.
Yeah. That was one of the kids. It's all right. We're good. All right. Workers' compensation. Again, we'll touch on this really quickly. Just know that workers' compensation is not required in the state of Texas. It should be. Don't get me on my political my box here, but anyway, you do not need to have workers' compensation in the state of Texas. Now, if you don't have workers' compensation, you can be held personally liable for any injuries that an employee has. So just to touch on how workers' compensation works, just real quick. So workers' compensation, there's no limit on the medical expenses, the bodily injury medical expenses as if an employee is injured. So again, I've personally seen an $8 million workers' compensation claim. I've been doing this a long time. I got bad stories. I'm great if you get a couple beers in me at a bar, because I can entertain you for hours. But just know that again, workers' compensation is not required. But let's talk about the coverage real quick, how it does cover. So workers' compensation, again, will cover the injuries of an employee. And again, there's no limit. So whatever the damage is, it covers it. What it also does is it will cover, it will pay death benefits to a dependent party if an employee is killed. If you do not carry workers' compensation, as I mentioned, there are some alternatives which we don't need to get into. That's where that non-subscriber, that's more complicated than we need to get into at the moment. But just understand that you're personally liable for an injury to a worker. Now, just real quick, workers' compensation is required in almost every state except for, I think, one other one, and I don't know that one off the top of my head. But if you have a business that's not only in Texas but goes to other states, you need to be hypersensitive to this, because other states are going to require that you carry workers' compensation. And if you carry workers' compensation for an employee in a different state and don't carry it in Texas, you are really, really opening yourself up to a bad legal a mess, because you're not offering the same benefits to the same employees. Wow. Hold on a second. So let me ask you this. Does anybody have any questions on workers' compensation? All right, hit me.
So should you have workers' compensation if you utilize 1099 employees?
You need to check with your attorney and your accountant and figure out if they pass the test. There are rules within that, and I know them, but really that's more of an accountant type of a question. Some of the rules are going to be, do you pay them by the hour, by the job? Do you direct them? Do they provide their own tools? There's rules there that your accountant will answer, that can answer better than I can. Because again, I don't know the specifics of what those employees are doing. That's a great question. We get it asked all the time. But again, that's more of an accounting question.
Okay. If my employees are only working online, will workers' comp be beneficial?
Well, yeah, that's a good question too. Let's think about what type of a claim. Let's say that an employee develops carpal tunnel as a result of working from home and online. That would be a workers' compensation claim. Here's another one that you probably want to think of. I hear when you say only online, but do they ever travel? Do they ever go to a conference? Do they ever go to a client's work site? Do they ever do anything outside of their house? And if they do, then you have an exposure there. Again, while they're traveling, while they're at a conference, while they're going to see a client at their work site. So here's the thing. For somebody, workers' compensation, all insurance has there's a premium associated with it, right? And the premium is associated to the perceived and the actual risk, right? So what you need to keep in mind is, well, gosh, I don't want to have to, workers' compensation is going to be expensive. Well, if you've got employees and they're working from home and they're online, the carriers are going to recognize that, and your rate is going to be super cheap. I mean, it might be 25 cents per $100 of payroll. That's not very much money, right? So when you look at it and go, well, gosh, I don't know if I need to provide workers' compensation to my employee. And then you do the math and you go, well, that's actually $362 a year for them to be covered. Money well spent, right? Whereas, if you're if your business is such that you're repairing cell phone towers, right, and people are climbing up hundreds of feet in the air, their rate is not 24 cents, 25 cents per $100. Their rate might be $25 per $100 of payroll. That's a lot of money. But again, there's always a premium associated to the risk. So to answer the question, yes, you have an exposure.
So we had one last question about the typical cost of workers' comp, and I think you kind of covered that with depending on what you're trying to cover. So we can.
That's right.
Yep.
All right. Cyber liability. So I actually got a call today from a very large client of mine, $250 million in sales, very sophisticated, been around a long time, have all the policies and procedures in place. They do everything correctly, except last month when they bought a new forklift and they were going to pay for it by ACH. And somebody somehow got a hold of their email, sent it to their accounting department, and the controller changed the ACH wiring payment instructions, the account number and routing number, and they sent off $28,000 to don't know where, to Russia or Mexico or wherever, but they're out $28,000. And the only reason they knew it is because the guy that ordered the forklift called the vendor and goes, "Hey, where's my forklift? We paid for it October 19th. And the guy goes, "No, you didn't, because we didn't get the money." And so that's a cyber liability claim. Cyber liability is the absolute wild, wild west in terms of the insurance marketplace right at the moment. There's so many losses and there's so many stories that, again, this is a topic all that could be contained all to itself. A couple of things that you want to keep that are really hot. What used to be, again, going back probably, I don't know, 6, 8, 10 years ago, cyber liability, the big threat was that bad people will get your personal information. Bad people already got all your personal information now. So, that one's done and dusted. So that one, that's all out there already. So that's still a cyber liability claim. There's still an exposure there, but that's really not the one that the insurance industry is concerned right at the moment about. So a couple of the ones that are really big, that's social engineering is what I just referenced there. There's a couple different terminologies that you can use to it, but associated with it, but we refer to it as social engineering. Again, that's where somebody gets in, they say they're not, they say there's somebody they're not, you send them money. That's bad. So what you need to do is have procedures in place, make sure there's dual authentication and all those things that smart smart business owners need to be doing just to make sure. Use a phone, call the vendor, call the bank, make sure that, the information that you have been given is correct, is accurate. It's certainly worth, the phone call to save $28,000 and you get to go buy a new forklift, right? So that's a big one. The other one is, okay, there it is right there. Cyber extortion. So that's the one where somebody says, hey, calls you up and says, hey, I'm going to lock you down. I'm going to make there's also a term called bricking. I'm going to make your computers bricks. I'm just going to shut you down if you don't pay me this certain amount of money. That one's very real. I work for Frost Bank. I'm on the insurance side, right? But Frost is a bank. I work for a bank, and it's unbelievable. I mean, it is unbelievable the stories that we get of the extortion, and there are some really bad actors out there, and you'd be amazed at what we do and what we don't do, and what the government tells us to do and tells us not to do. So there are situations, there are certain bad actors out there that the U.S. government has identified, and if you get attacked by them in a cyber attack, the U.S. government will actually say, "Go ahead and pay it, pay it." And there's others that they say, "Do not pay it." And your bank is actually going to have a big influence on that, because you're going to have to call your bank. Most likely, if the claim's big enough, you're going to have to call your bank. And you're gonna have to tell them what's going on, right? And sometimes there are certain situations where the bank legally cannot do it, or else they get in trouble. So, there's insurance coverage to cover this. It's not, generally speaking, it's pretty reasonable. If you are a smaller business, I would say that the premium has definitely gone up. A couple of years ago, you could probably be looking at $1,500 to $1,800, something like that, for a basic cyber liability policy. That number's probably gone up to $3,000 or $4,000, I'm guessing. But more than that, the insurance carriers have started to become much more demanding, if you will, of the protections that you have in your computer system. So again, the idea of remote access, right, is a big deal. You have to have dual authentication. So again, you've got to have something where you log in and then it sends you an authentication code. If you don't have that, you absolutely need to have that. But just know that cyber liability is a coverage all by itself. So it's not covered under general liability, property, any of those things. So again, if a bad person gets in there and steals your money, call your bank, because you want to retrieve it quickly. This is a big subject. I'm hitting on it just hitting the surface. Let's throw it out to questions and see if anybody has any specific questions, and then we could maybe go from there.
So we have a specific question. What exposures do you see for a fine art gallery operating primarily online, both with property insurance and cyber liability?
Ooh, that's a good one. Well, the property, obviously, you're going to have the exposure there if it burns down or blows away. You're going to have a real exposure there in how you ship that art to wherever it's going. That's going to be a contractual thing, right? In terms of whether you're responsible for it or they're responsible for it. Work with your freight person on that. So that's going to be the property part of it. The cyber part about it, ooh, that's tough. You got to make sure it's there. I'm not sure if you actually take possession of the art, but if you are basically connecting a buyer and a seller as a broker, right, which is certainly possible. Again, where you're connecting a buyer and a seller of a piece of art, and let's say that somebody gets in and either it's not actually what they say it is. It's completely fictitious, but they've done a really good job of representing themselves in such a manner that you think you're buying something and you're not. That's a big exposure. And then the other one is going to be just the money transfer part of it. And that would be a cyber exposure is the how the money gets transferred. That's a unique business. That one would be tough. What I would tell you is for something like that, so specialized, I would check trade associations or something. Put your ear to the ground and find other people that are in that same business and see if there's a specialty program out there, because there very well could be, that's specifically designed, and that might be, it might be an agent in Spokane, Washington or something that somehow has a program for online art dealers. That is not something that I would do. But I would look for trade associations like type businesses and see if if there's a specialized program, because what can happen is if you have a unique business like that, and again you have an agent in Spokane, Washington that has this program that does them all, they will typically have a program that's broader. The coverage is broader than just your average everyday carrier, like say Hartford or CNA or Travelers or any of those folks. They'll have they could very well have a specialized program. That's a great question. Tough one to answer. You've got some unique exposures there. Any other questions? Yep.
So that was kind of like the other one with the garden coach. If you have a limb hanging out of the box, you probably need to talk to somebody. So Kish wanted to know about dual authentication. I guess some clarity around that, just kind of what it is.
Yeah, so just the basics of it are, and again, I am not an IT person, but just the basics are, you log on right to your computer. I'll take, for instance, like what I have to do. I've got a Frost device and I log on, my username, password, all that stuff. And it starts up the computer, right? I mean, it starts the computer up, but I can't get into our network until I've got an application on my phone, right there. And what I do is I hit that button, right? And then it gives me a number, which you can't see because I've got it blurred out. And then you put that authentication code into a site pops up, a prompt pops up in your computer. You enter that authentication code, and then it allows you inside your network. Again, any IT person at all should be able to do that. It's not expensive. It's not complicated. To my understanding, that used to be a really big deal. It used to be expensive, but I don't think it's that expensive anymore. And every business needs to have that. If you've got anybody accessing your network from a remote device, dual authentication, real super simple. Ask an IT person. That is not my area of expertise, but that's what it is. And by the way, you can't get insurance coverage anymore if you don't have dual authentication for cyber liability. Because what was happening was, in the early days of cyber liability coverage, basically businesses were using cyber liability coverage as a maintenance policy. So they would just wait till something happened and they'd upgrade and use the insurance carrier's money to do the upgrades. And the insurance carriers obviously got smart for that. Like, yeah, no, thanks. We'll do something else. So now they require that dual authentication.
So that's all the questions we have on the cyber liability, Mark. I do have a couple that from past that we didn't get to yet. So
sure, hit me. Let's do it.
So Sonia wanted to know, when she's been looking to bid for janitorial jobs, she's asked if she would be willing to add the other company to the policy as additional insured. Is that common?
Sure. Yeah, it's a great question. That's a little bit deeper than what we're touching today, but certainly can address it. So, okay, when you sign a contract, somebody's going to ask you to be named as an additional insured, and they'll probably require that's a waiver of subrogation for a company, a business like that. So what the additional insured means is that you add your client on your policy as an additional insured, meaning that if let's say me, I'm the janitorial service and I caused damage to an office space that I'm cleaning. And then the next morning that owner comes in, or the business opens up and they go, what happened here? There's damage, whatever, something's damaged. So they look to the landlord, right? And go, hey, what happened here? And they're like, I don't know. And so then after a little bit of investigation, it turns out that the janitorial crew did something. And so, but you're hired by the landlord, by the building owner or the business owner, whatever, doesn't make any difference. And so what additional insured means is that if there's any loss that arises where that building owner or that business is brought into a lawsuit, then you are going to defend them under your insurance policy as an additional insured because they had no participation in that claim. Very, very common. Waiver of subrogation kind of usually goes along with that, and that is where if, again, let's say that I'm hanging this one's an easier example for me. Let's say I'm hanging a sign out in front of a building, right, on a building, and I drop a hammer and it hits somebody on the head, right, and it causes damage to them. Well, I'm hanging the sign on a building that I don't own, right? So that person that got hit by the hammer goes to the building owner and they sue him, right? And then they sue me who dropped the hammer. And so there's an issue where subrogation insurance carriers behind the scenes can basically trade dollars to pay each other off for claims. And what a waiver of subrogation means, it says that if you're the building owner, it says that your insurance company, sign manufacturers, sign installation company's insurance company is not going to come back to me as building owner to recover any claims that might result out of your business. Very common. Again, additional insured, waiver of subrogation, both very, very common. And again, it's to protect, basically, to summarize it, it's to protect it's to protect your client for any losses that might arise out of your work that's not their responsibility. So great question. Don't run away from it. That's a very common ask.
Then we had another question back when you were talking about the business disruptions, Mark. She wanted to know what types of disruptions qualify, especially when you're not a brick and mortar. So I'm assuming like those online.
Yeah, so it's a great question. I'm going to give you a very, very vague answer. And the answer is a covered peril. So a covered peril could be, again, it could be a fire. It could be, sometimes, again, the coverage can change, but it could possibly be civil unrest. It could be vandalism. Your building's vandalized. It results in you not being able to function. In certain situations, and again, the coverage can change a little bit, but in certain situations, it might be a disruption in your power, your electricity. So let's say that somebody hits a telephone pole, right, and pops out, busts a transformer a couple blocks from your office, and you're out of power. That could be your business could be interrupted by that. It can pay for that. It's again, I'm going to go back to my very general statement of it gets paid when there's a covered peril.
Okay. And then we have a Facebook viewer that's asking, so she has 5 commercial insurance policies for a restaurant and food truck, and she's looking for a better, lower cost protection and wanted to know if she could reach out to you.
Yeah, actually, she certainly can. I will direct it. We actually have somebody in our office that does a lot of restaurants, and so I'll be happy to direct her to him. Yes, absolutely.
Perfect. And that's all the questions I've got. Oh, most big banks offer business insurance, like Bank of America, Chase, Wells Fargo.
Yeah, so I'll brag on us for a moment here. Most of them, or some of them, do it, but most of them do it very poorly. So Frost Insurance, the number is going to vary a little bit. Let's just say we're the 5th largest independent agent in the state of Texas. We write approximately $600 million a year in written premium. We're about 53rd largest in the country. We're absolutely one of the top bank-owned agencies in the country. Most banks really have not done a good job. The laws changed back in 1998, I believe, which allowed banks to get in the insurance business. They don't do it well. They're not set up to do it. we're one of the very few bank-owned agencies that have really done it well and excel and do an excellent job doing it. You can ask. I wouldn't necessarily not go through whoever your bank is now, but I would tell you to make sure and qualify whoever it is that's actually selling you the product, which is pretty basic 101 stuff, right? Make sure they know, who they are. Make sure they actually are qualified to do it. But yeah, I mean, there's some that do it.
That clears out all the questions in the chat, Mark, if you want to.
All right, let's go on. Where to get insurance? I think I'm slow. Hold on a second. All right. I didn't realize this was going to be this way, so let's do that. Okay. So there's a lot of words on this page. Let me just kind of summarize it. There are different types of agents. As I mentioned earlier, I'm an independent agent. So I can literally go to hundreds of different insurance companies. I don't go to 100 different insurance companies, but I can. So, so what that means is that, again, if you've got a business, I go out and go to all the golf tournament insurance carriers. So Liberty Mutual, Hartford, CNA, Travelers, AIG, all of those insurance carriers are the ones that, generally speaking, we work with. And again, our deals, we package them up, we send them out for underwriting, and then they come back to us with a quote. There are captive agents. That would be your State Farm, Farmers, Allstate, those types of folks. And a State Farm agent only has a State Farm product to sell. So they serve a purpose. They can be very good at what they do in their specific niche, but they don't have the depth. As your business grows, you'll outgrow them pretty quickly. They do a great job in their space. They do a great job. Like State Farm, again, if you've got a $300,000 house, 2 cars and a dog, they're awesome. We also do personal lines. I personally don't do it, but we do it. But our personal lines people are going to be, if you've got a $1.5 million house here in Texas, and you've got a lake house and a house up in a mountain somewhere, art or whatever it is, then you would want to come to the independent agent side again, which is where I am for the personal lines. The same thing happens on the property and casualty side. Don't read too much into the brokers, that bullet point 3. Just know that there's independent agents and there's captive agents. Both serve a purpose. Both can do a very, very good job. The thing is, again, and we get down to the 4 steps to buy insurance. The assess your risks, we've kind of touched on that. A reputable licensed agent, that's really the most important thing. Again, the question was asked earlier about buying coverage through the bank, through a bank. Sure, go ahead and buy it through a bank if they're qualified, because again, there's on the property and casualty side, which is again where I am on the business insurance side. There's a lot of intellectual capacity that's required in order to actually run an agency on the business side, because it's not boilerplated. Everything's different. There's different contracts. There's just different exposures. Everything is unique. So, the idea of going to an agent it's a 3-man shop, that wouldn't be my recommendation. Just because the numbers are such that it would be hard for them to have, again, that depth of knowledge. Now, again, if you go to a State Farm or Farmers or one of those folks and they can fire it up on their computer and issue out a policy really quickly, that's probably going to be good. That there's going to be limitations there within it. And generally speaking, that's going to be in a certain band of business size. Hitting to the 3rd bullet point, again, shop around. Here's what I would recommend. I would not recommend going to 6, 8, 10, different carriers. It's a huge waste of time. What you need to do is do a little bit of upfront work. Again, find out, what do I where I think I might need to go. Pick 1 or 2 or maybe 3 that you feel comfortable with and go with them. Pick one of those, take those 3 through the entire process and make a decision based off of that. Because what you don't want to have is just, again, you don't want to have 6 or 8 different people out in the marketplace. It just gets too confusing. You need to find somebody that you feel like you can trust and go with them. Reassess every year. That's a really big point. It's not necessarily reassess your insurance agent. I would not recommend that. Again, if you feel comfortable with your agent, I would absolutely recommend that you stay with them. Because the longer you stay with them, the better you get to know them, the better they get to know you. They can identify risks that you might not necessarily know you have. And it's just a better partnership. The reassess every year, really what that means is reassess your business. So make sure that your limits are adequate. We're going through an incredible time right now where inflation is just going through the roof, right? Construction costs are just crazy. I do a lot of apartment developers and you might have had a 200 unit apartment project that you could build 10 years ago for, say, $14 million. That same project now costs $40 million. It's just incredible, the inflation in terms of the building costs and everything. So you want to make sure, again, with everything that you own property wise, that it's adequately covered. Make sure your cars are adequately covered. Make sure your house, just using your personal insurance, make sure that your limits are adequate, because again, costs for everything have gone up substantially. And if let's just say you have a building, right, that you bought, I don't know, 6 years ago, and it cost you $200,000 to buy that building. And you're like, well, I paid $200,000 for it, so that's what I'm going to insure it for. Well, that building today might cost $600,000 to replace. And if it burns down or blows away, insurance carrier is only going to give you $200,000. So you're going to be out the difference to rebuild that building. More so than any time ever in my career. The valuations of property has become a real challenge. It's a challenge, and it's just something you want to be aware of. But that's kind of it. Any questions as far as that's concerned?
So Ginger wanted to know, is there a reference, like a paper copy that has basic points of coverage listed?
This is kind of it.
Yeah,
So,
that's what she said, that she knows this was being recorded, but a list is helpful. And I do have your slide presentation if you're okay with us sending that out.
Sure, absolutely. Yeah, sure. Absolutely. Send it out. That'd be great. Because that's going to give you the basic framework of the insurance for both businesses. Yeah, absolutely.
Any other questions? Do you want to throw up your contact information, Mark?
Well,
or I can put it in the email that we send out. I can just put your email. Is that okay?
Yeah, do that. That'd be better. Yeah.
Okay. Any other questions?
It's a Tuesday night and we're talking insurance.
It is. Well, thank you so much for sharing with us tonight, Mark. We really appreciate it. I'm sure if anybody else has any questions, you can reach out to Mark. You can reach out to your own insurance agent. Now I feel like you've helped kind of equip people with some information. They can go back and start asking some questions. And so next week we have Kelly Traeger from KKT Law, and she's going to be talking about for the business of business entities. So understanding about sole proprietorship, LLC, and those kinds of things. So if we don't have any other questions, One last question. So Kamika wanted to know, she's had challenges being in the arts and entertainment and working with youth, finding coverage. Any recommendations on carriers?
Boy, that's a tough one. Again, I'll go back to look for some peer group folks within your business. Peer groups, try different parts of the country, even maybe. That's going to be a very, very challenging coverage, because you've got the issue of dealing with kids and abuse and molestation coverage, and that's a challenge. That's a huge challenge. Like I said, I would look for trade associations. Again, people that might do the same thing that you do in a different city. Call and ask them. That is not something that we would generally specialize in. That's a tough one. Good luck.
Yeah.
That one's really, really tough, especially if you're a small business starting out, because the coverage is going to be very, very expensive for the amount of revenue that you generate. That's a tough one.
Well, thank you again, Mark. We really appreciate your time, and we'll see people on next week. Tracy, did you have anything?
Oh, I just wanted to thank him. Such great information, Mark. People don't realize all the different risk there is with having a business. Thank you again.
Yeah, my pleasure. My pleasure. Thank y'all.
Thank you. We'll see you guys next week.
Bye-bye.